I'm doing good, doing good. Still recovering from this 1 2 mile run this morning. That's how I'm
Yeah,
feeling
Ooh, hey,
currently.
I, I didn't keep up with the chat, so didn't know he did that.
Say again?
we are live, ladies and gentlemen.
Uh,
What's up, guys? How are you? Good morning.
Good morning.
Morning.
I got my
Feeling good.
strong coffee right here.
Oh man,
You and
I
me
feel like
both.
I'm missing out.
The car and I
Brian,
did
I
went
got one
on
of
you
these.
today, so you got one on me.
My wife got me. My wife and kids got me one of these mugs that keeps your coffee hot. It's got like a little battery down here in the bottom. Oh, it is a game changer. It's so good.
Nice. Are you an instant coffee guy, or what do you do?
I hate to admit it, but I just have a Keurig.
Hey, nothing wrong with that.
Yeah, I know. I want to move to something nicer, but I haven't done it yet. We'll see.
Man, we have everything. We do. I do instant coffee. My wife does. She grinds her own coffee beans.
No, really nice.
Yeah,
I
well,
have a French press. I just don't use it often. So we got a couple people trickling in here. Let me make sure we are live on all the platforms. Looks like, yep, we're live on X. We're good on Instagram. Good on YouTube. So how was your weekend, guys?
Good. I had a little bit of a busier weekend. Got a lot of, content recorded up. A lot of great things coming.
Man, mine was just.
Nice. I like to hear it.
I visited my parents, helped set up a new computer.
Oh, nice. Oh, good to see the parents. Yeah.
They're fortunate to have people that can, set stuff up like that.
Yeah, I bet.
It's like, go away, just let me do it.
Yeah, exactly. Yeah. The more they try to help, the harder it becomes.
So I don't know about you guys, but man, I was tracking gold. What would be my yesterday evening, and man, I saw a setup, and I just wasn't near the computer.
Oh, really?
I was helping my dad. So, but I was wondering if you guys saw that or got a piece of that during the Asian market.
So I actually, I'll show you. I was watching Naz, and I'll show you what I ended up taking. But we opened. This is a 15-minute chart. You can see we opened the Asian market with like a massive gap. I think it was like 100-point gap up from Friday. So, and then this was like our opening print we opened. So I saw we got the massive gap and we got this pullback into the opening print. So I actually took an overnight trade off of this little bounce that I held. And I have a strategy that I've talked about. I've found on Edgeful, which is the London Open 15-minute orb double break. It's basically what it is. I had a theory that the London markets would open at 3 a.m. and the market would push in one direction as kind of a fake out, and then we would reverse that and trend the other direction to the New York session. That was like a theory that I had. But then when I got Edgeful, I was able to kind of back this up. So looking at the 3 a.m. London Open, if you're looking at NQ, which is the same as NAS, you can see the 15-minute orb gets a double break nearly 80% of the time. And so basically what that means is the first 15-minute candle will set a high and a low. That becomes your 15-minute orb. And basically what I look for is once it breaks one side, I know there's an 80% chance, statistically speaking, from Edgeful that it's going to break the other side. So I try to use that in conjunction with my levels. One of the levels that I've talked about a lot is the opening print. And so we had this opening print, and I'm looking at the 15-minute chart here. And so if we look at, I think I have my time zones wrong. Hold on, let me change this. Yeah, I think I updated this and it must have changed time zone. I was able to do it on my phone. Let's see. Maybe just click this. Here we go. And then, of course, I lost my glasses too. I can't find my glasses. I'm over here squinting.
My glasses.
Where? Does this give me 3? No. I know this is the candle I'm looking for. I just want it. When I talk about it, I know. Oh, here's New York. That's got it. Okay. So when I talked about this, the 15-minute London orb. So this is our 15-minute candle, right? And so we know based off of the stats that both the high and the low of this candle will get broken 80% of the time. So we put in the 15-minute candle. The next candle then breaks below it first, right? So at that point, I'm waiting for us to trade into a support level that we may have. The only level that I had with the gap up that was kind of in the range was this overnight opening print, which we take from the open of this candle. And so basically that was I added to my trade at this point because I took a trade over here, but we got this spike into the opening print that then started to hold. So on a smaller time frame, I took an entry. I took an entry here as we were starting to bounce. And you can see we ended up then breaking that 15-minute high as well. And my next target that I have was 21,018 on Trade Locker. So that's what I'm aiming for. And yeah, so that's the London double break strategy that I have kind of kept an eye on, how I use it in conjunction with my levels. And I do fully, so that those statistics of 80% are obviously really high. And like, I do fully admit that like sometimes the reason those stats are so high is because it'll spike underneath this 15-minute orb and then it'll spike back above the 15-minute orb really quickly. And I think that plays into those stats for sure. But when you use it in conjunction with levels and, or supply and demand, whatever you may use, it's a trade that I've found that works pretty well for me pre-market sometimes. But yeah, so I'm holding some runners on that, aiming for that upper level. But that's what I'm in right now. I'm pretty bullish on the daily chart, like I've been talking about on NAS overall. Weekly chart strong. I'm just not somebody who likes to fight a trend that's strong. So I'm still leaning long on the short week here, holiday week, right?
Right. I like your explanation.
Thank you. Yeah. Hopefully that made sense. But yeah,
give me my airline ticket. I'll come sit by you and trade.
I'll pull you up, Brian, if you want to talk about gold that you were watching.
Yeah, we'll do that real quick. I'm sure Kyron kind of had something pretty similar. We seem to do a lot of high and low talks, right?
Yeah.
And let me tell you something, and anyone viewing, man, Kyron, I've been listening to you, and it's got me kind of adjusting a little bit on my pattern watching on my, higher highs, higher lows, just watching those three-legged extensions, and I've been reading for the past few days a little bit more on it, and just trying to better coordinate it with my own supply and demand. But gold's been really rockety for me the last several months. So I've noticed I've morphed kind of more into a support and resistance type of guy, which is really lines versus zones, right? But so when we finished off last week, what are you smirking at there, Carmen?
Oh no, I'm just listening to you.
Yeah, but well, I guess in a nutshell, what I'm saying is I'm trying to keep it simple, right? Just maintain simplicity. But coming off Friday, we were watching this thing. I was watching this thing zone out. I think I took a trade in here. I think I took a short. But more importantly, I've been watching it for it to come back to this area of interest that I've marked here. And of course, it zinged right through it during the Asian market. Whoops.
Logged you out.
We went off. So let's do this. Switch it off to me from me and get it over to him.
Yeah, I got you.
And Kyron, what I could say is on the 15-minute chart is the chart I was on. And I was basically gearing up for a question for you because I was curious how you looked at some of this. But I marked my in the last if you switch to the hourly chart, you get your higher high and then eventually a lower low, I believe. Can't remember.
It's high and then this
Yeah.
low.
Mark those. Yes, sir, right there. And then I switched over to the 15-minute chart. That's where I was going to start talking just now. And yeah, that's a 15, isn't it? Yeah. So those two, yeah, I got the same spots down low. On that lower zone you have there, that those two lower lows, and then afterwards it was followed by that lower high in your other key zone level. Yeah, and our zones and levels are marked the same. We're pretty spot on with each other. But backing up, if you back up right before that first long candle at the beginning of the Asian market, there was a
This one or
yeah, right there at the
okay,
bottom there at that lower wick.
Mm-hmm.
Not that liquidity grab, but right around that 2000. Yeah, right there.
Okay.
There was a market structure shift right there. That's what I was talking about. I noticed couldn't get into the play, and I was going to take a short right there. Just wasn't near the computer. Coulda, shoulda, woulda. But now you can take over right there and tell me your thoughts. That's the short I wanted. I thought it was pretty textbook. You go in there and that's a massive market structure shift right there.
Yeah, it is.
Yeah, and then of course you would have been on that huge short. Now my trading style isn't to write anything out. I always stress that I take these for gold 20 pip interval take profits off the top. So I would have TP'd out somewhere probably around 26, 8. Well, just go about 100 pips down. But yeah, that's all. That's all.
No, I think that was a good move and a good identification of like that smaller time frame market shift.
Yeah, you have to mark that upper closer to the Asian Open, that higher high that it experienced.
Mm-hmm.
Yeah.
Okay.
Yeah. So that's what clued me in. When I saw that hit, I thought, well, if we get a lower high and then market structure break, I couldn't believe it happened, But
yeah.
I don't know about you guys. I don't take trades from my phone. I've had too many accidents happen.
Yeaterson does.
Yeah.
That's my alter ego. That's my alter ego, Brian. I don't know if you've watched this stream at all, but we've been joking about me eating trades. And,
yeah.
So yeah, Yeaterson, my alter ego, he'll take trades from the phone because he's the one who breaks the rules, not me.
Yeah.
I mean, yeah, I'll take trades from my phone too. It just depends on if I'm like, it depends. Sometimes I'm not always at my desk setup. Generally, though, I will say that those are more impromptu trades. I would prefer to probably be at my desk, but I mean, if I'm
you
not,
have your levels marked and your charts marked, and it's kind of part of your plan already, and you just don't happen to be at your desk, like I'm okay with it. But even if I do, I typically take them smaller size. Something about it just feels different than when you're not at your full setup, in my opinion.
Yeah.
Question for you. Lito just brought this to my attention in chat, and I just I looked it up. But I guess this happened 2 days ago. But China finds 83 billion worth of gold reserves. Curious, you guys think that is a bearish thing for gold? Basically, just now there's more supply being circulated of gold. Like, is that overall lower the price of gold? Do you think? Does that have anything to do with us? And we're off. Anything to do with us kind of selling off here?
I think it could. Now, me, I'm always structural based on gold.
Yeah, for sure.
When it comes to long term and long time frame. In the short term, that could have some bearish effect. What I'm looking at here on gold is that, if we dial it up to this daily time frame, especially what the move that we're seeing off of this current level in the daily time frame, we were creating higher highs and higher lows, and then we came through in the past couple, or I want to say since the beginning of November, we came through and broke out of a key low here for gold. Now, I'm not saying that gold is in an overall bearish market, but if we're looking at this just on a structural basis, price created a high. We came through, we broke through this low here. We retested back into our supply zone, I guess you say, based on this daily time frame. And then just the reaction today alone off of, or I guess really starting on the new daily open from last night after we created that high, this bearish volume to the downside. And then keeping in mind that
the last two candles.
we do have a gap right here. So I'm not sure if this is consistent on like other platforms, and I would have to verify. But if this is indeed a gap on multiple platforms, then this is a place that, or an area I should say, that could get filled. So just looking at the markets today, I mean, obviously we have a lot of bearish volume. And for me, I would obviously look to fight this bearish volume, but look to see if I can't find a continuation play here for this volume to the downside. And if we can, I would see. For me, though, it's hard to set up a larger time frame target that wouldn't be, you know, this gap here, because obviously I want to capitalize on a smaller time frame move. And so where we're at currently, there's not very many areas of interest that I feel personally comfortable looking to target. Like, I mean, this area where we're at now would have been an area that would be nice to target, potentially these lows down here. But in order for me to target these lows, I would first want to see some type of either a correction and a continuation, or like a smaller time frame break through this low and then a correction and continuation coming off of the next 1 hour candle, being that we just had so much volume on the current 1 hour. But in terms of like selling into this resistance level here, you can kind of see it's a resistance on this 4 hour time frame as well. I'm not necessarily too inclined to it. If we do get a, you know, a pullback opportunity to where I can capitalize on the continuation of the volume, then yeah, I'll do that. Because that's looking like the only play that'll be available for me today, or at least during today's session. So obviously I don't force things, or I'm not looking to force nothing, but if we can get some type of correction and then signs of a continuation, I'd be interested in going short. And I'll likely potentially target, depending on what type of correction we get, whatever this low is that's created. So if we get a full-blown correction, and not that we will from here coming off of so much volume from the 1 hour, I'll look for a smaller time frame sell, and, you know, likely target the lows or this resistance through here.
Now, Tyler,
yes,
in response to your original, question, was it last night, or I guess early this morning? As far as the gold drop right now, on fundamentals, Trump, soon to be elected President Trump, he picked his Treasury Secretary, and Scott Bessent, can't remember his name.
Bessent. Oh yeah.
Okay, yeah. Well, that guy's a hedge fund manager. So he's going to be in charge now of the U.S. Treasury when Trump becomes president in January. So gold is starting to lose ground right now as soon as they announce that. And that soon to be Treasury Secretary, his reputation as like a cautious operator, he's likely to curb some of Trump's, like, any radical economic and trade policies. People see that way. Yeah. So in other words, like, it's gonna have calmed the gold market and reduced gold's need to be a safe haven demand. So I would see people pulling off of that now, and we might be looking at shorts for December is a flatline trade month, right? But you might just float that thing down all the way for the next few months slowly.
Yeah.
Just something that
that's a good point. There's a couple fundamental factors there that could give you reasons to have kind of a bearish overall outlook on gold.
Yeah. And I don't trade fundamentals, but I always like to be aware of it. I always brag about how much I like to read about gold.
Yeah. No, I think they're
Gold's
still.
like a treasure.
Not that I really like to use them in my trading, but I think they're. It's good to have an awareness of what's going on with those things. I want to answer Teep's question. Shout out to you, 3K, for the day. That's awesome. How am I managing? So I got stopped on my original position that I was in. In pre-market, I had my stop loss moved to in profits, and so I got stopped. But I did take another entry here based off of the index action. SPX is everything kind of sold off out of the gate. The Russell actually ripped out of the gate, but US 30 YM got a little bit of a sell-off and then a strong push to new highs. SPX got a sell-off and then a push to new highs. So I took some NAS longs, hoping that it can also push to new highs with the rest of the indexes. Put in a nice wick, but right now we're still fighting the opening print on the day. Oh, and I marked it on my. For some reason, Brian, it doesn't let me show my my Trade Locker app. It only lets me show the browser.
To answer your question, Wizard TP, my social media is For the Culture FX. So For the Culture FX. That's you'll find me on all platforms with that. And to also answer Patrick's question, do we trade live every day? We go live Monday, Wednesday, and Friday. So 3 days a week. You can expect to see, not just myself, but others up here on this stream. And hopefully in the future we'll expand to more days as the team begins to grow.
Yeah, I think that is the plan is to hopefully expand it. Yeah, Teep, I just have a overall bullish outlook on this daily chart. Friday I talked about it pretty detailed about kind of this daily failure to go lower from this area that we've had. We tried to sell off a bunch of times, but kept bouncing there. And so I was actually looking kind of the daily chart. What we're getting now was kind of what I was looking for on Friday. I was hoping to get a little bit more continuation on this candle on Friday. But we just so happened to get it on the gap up and kind of overnight move so far on today. But I have a level that's 21,018. That's kind of my target today on NAS. So I'm still looking long biased until the market starts to give me signs otherwise. But right now, if you look across the indexes, I think things are looking pretty bullish across the board still. I do have Bitcoin coming into a support level as well.
Bitcoin.
It's
was all over the news this weekend. Shoot.
Yeah. I don't have my Bitcoin chart marked up, but we just bounced off a level off the Bitcoin futures chart. I mark all my levels on the futures charts. We have a level like right here, kind of an area of levels, but I'm not taking anything on Bitcoin right now. I'm just going to let my NAS play out. It's starting to work. I'm already up a little green on the day, so I'm not gonna overexpose myself right now. I'm just gonna try to let this one work. Currently on my 25K challenge, I am up nearly 2,000, 1,880 with my open profits right now. It's a nice push on NAS coming into that first profit target I have here.
I was thinking about might start a new 200K challenge with FunderPro. If I do, I know for sure it'd probably be a fast track because on my personal account, or I really consider that my swing account. But I'm thinking about doing something like a full exposure, full transparency, show all the trades. So if I take anything when I'm not streaming on FunderProTv, when I come on, I can show any trades I made, just show the log, be very, very transparent. And just it would be strictly one strategy only, support, resistance, watching highs and lows. And I know we'd to our watchers, we'd like to make more trades during our streaming, but we can't take trades that aren't there. Too often these setups occur outside of our streaming hours. But I thought, well, maybe the next best thing is I just show full transparency on trades I take outside the streaming. So whether I stream once a week or twice a week, whenever, just show it, but I thought a 200K would be fun for people to watch, because I those are big dollars. Really,
yeah.
And I agree.
To take some profits from 25K and maybe roll it into a bigger account.
But I mean, like, I want to show like my stop losses, just the whole 9 yards. I'll leave it drawn so I can slide back, a few days to show history of trades. Things that are already marked up on my charts, really, on the ones I trade on. So that might be, and what would be really interesting is, let's say I fail the challenge, right?
I mean, even that transparency would be valuable.
Let's see, What?
We just tagged my price target. I took off half. It's the move I wanted to see. Right now, it's such a strong push. I'm honestly hoping we can get a trend day out of it. We'll see. I'm not going to get too married to it. I'm probably going to move my stop to break even on the rest of this position. I'm going to move it up here under this spike low that we had. So I currently have $96 of risk on. This is only 0.2 contracts. I went in pretty small on the re-entry. But I'm liking the push, that's for sure. So go ahead, Kyron, sorry.
Oh, no, you good. I was just going to say, Brian, it's funny that you mentioned that, because I planned on doing the same thing myself and like documenting, A to B. Now, it wouldn't be just obviously trading. I want to do more of like lifestyle. So even outside of my trading, documenting the things that I do, how I start my day and things like that. But starting for me, it'll be likely 100K this week, because I have 400K in capital with another firm funded, and they just undergone another migration. So now I can't trade with that capital anymore until, whatever. They told me this morning that check the Telegram for updates, and that's when I was gonna know. So I need to, add more capital or more funds to my portfolio. So I'm thinking about doing that as well, and just documenting, the full journey, like you said, being transparent about, entries, exits, things like that.
Yeah.
And I know we all would be for the most part.
Transparency can help too. It adds like a layer of accountability when you start to do track, share that stuff with the world, right? And you kind of got a second think, hey, do I really want to put on this much stuff, or do I want to over risk, or do I want to over trade rate? You gotta when you're showing it all.
It'd just be cool to to just watch the journey, the process of going through it, the day-to-day battle. Like, I think that because obviously as I take trades and as we continue on the journey, there'll be things of value. There'll be good things and things that don't, go great, I guess you could say. But I think just documenting the reality of the journey would be just dope.
For sure.
The migrations
it's hard, man. When you go through those lows, because like I've definitely tried. When you go through those lows, it's hard to want to remain like on camera and talk about it. Like, it definitely gets hard.
It does. It does. It definitely does. Gold is seeing that continuation down, just coming off of the volume.
Yeah. Cam said, Yeaterson, you're on fire with the Nas bull run. When I'm at my best is when the NASDAQ is bullish. I typically take advantage of the NASDAQ bull run. It's when things slow down that you got to check on me. But normally I can take advantage of a bull run. That's definitely my strength.
Gold just happened to pass through my weekly key level, that I had pre-drawn a long time ago. So to me, whatever it does right now is going to be interesting because I know key levels, Kyron, are they're somewhat subjective. There's an educational way of drawing them in, but everybody's going to be slightly different. And,
yeah, no, 110.
And and you can have like a weekly key level, and the next person have the exact same coordinates on the chart and say, well, that's actually my 4 hour, and then for me, I don't do this anymore, but earlier on in the year, I gauged those key levels as certain variances of strength based on whether they were weekly, 4 hour, 1 hour, 30 or 15 minute. And then I started studying the subjectiveness of all that. And I started recognizing how much my 15-minute charts or zones just matched perfectly to my other ones. And I thought, so, like, in other words, if I was coming up to a 1 hour key level, I may say, well, no, that's more of a take profit for me or a stop loss versus an entry point. And entry points for me were normally 4 hours, weeklies and dailies. But I think it was this past August and September, gold, since that's pretty much all I trade, started doing a lot of weird waves in and out. Kyron, I don't know about your August and September, but man, my stop outs were just left, right, and center.
I had August was one of my best months for this year. August, and then like midway through October, after midway through October, for like 2 weeks until into the first week of November was like rough. Like I think I had, and it would just be, it wasn't even like I was taking bad trades. I would just get barely stopped out, and then price would run to my take profit, and it just kept happening over and over again. So the end of October, because I want to say I was hitting that October, and it wasn't great numbers. In October, I was making 22% of my actual profit potential. So how I do it is I go through trades that I could have taken in the week, either that I've taken or that I should have taken in my session and was missed. So I was hitting at 22%, which had made me around like 7-8K. And I was bummed because I, had left a 40-50K on the table. You know what I'm saying? So, but then coming after October, it like went down to like an 11 to, it was like 5 to 11% of my, profit potential is what I call it. So trades that I taken that were in the right, that abided by my system, or that I didn't take and missed. I missed a lot of trades, and then just had some unfortunate ones. I did have some trades, to be transparent, that I closed early that would have, ran to full take profit. And I guess that just comes with the territory. And I think it's more so because of I had been getting just ever so slightly stopped, and that had a negative effect on my psychology. Like, you know what, I don't want to lose, and so it caused me to close trades early. But it's definitely been heating back up with all of this price action that we've been having on gold, which is why I think it's a good time for me personally just to start a new challenge, because it'll be, the price action in the markets. I mean, we got great volume, so something that can capitalize on
for sure.
But yeah, I'm definitely bummed about the whole 400K capital being
that's
seized up.
That's awful.
I had a question for you, Teep. Teep said I'm actually doing a video on the 50K I got with FunderPro. Start to pay out. People can use my discount and go with a reliable firm and watch the real journey. Teep, are you showing that on your social media, your YouTube, like your YouTube page? Is it just like @Teep, or what socials? Put your social media tags in the comments. Also, just update on that. Pretty strong rejection back down to the opening print. I'm still holding the other remaining half of my position. I got my stop below that wick. So we're still in with the other half for right now.
Yeah. And T,
US
I think
Caribbean.
that just recording the journey, dude, is gonna be, for one, it's gonna have a great effect just on the YouTube algorithm because there's not very many, transparent, and I think that even the longer, well, I'm not gonna say the longer that it takes, but as you go through, days and weeks, you start to build like a type of repertoire, I guess you could say, where people expect a video to come out on this topic X day, and that gets people coming back and wanting to see more. And I just think that just documenting the legit journey, like the ups, the downs, the in the moments, kind of like what you talked about, Tyler. Like once you start getting in drawdown, it's hard to sit and record
Mhm.
that, and especially and to
Yeah.
post it, you know what I mean? And
Yep.
so, but I think that there's a couple of things that come from it. One, I know that recording and documenting my journey has helped me grow far more as a trader than anything else, because even as I'm making videos and having to edit them and go back through the process, I'm listening and hearing the things that I either did good or wrong over and over and over and over again. So I take one trade,
Yeah.
but I hear it so much that I got like 50 reps of this trade. And it got to the point where, especially if you're really nitty and gritty with it, like I haven't been as much in more recent days, but journaling it and making a video on trades or updating it, I could tell you every single trade that I took in October. Like, and I wouldn't have to, like, because I just remember certain instances. Like, for instance, there was NFP, the October NFP. I did a continuation move and was able to make a 1 to 2 on that move. But the week prior to that was CPI, and I had hesitated on a trade that ran to my full take profit. Actually hesitated on my high volume entry, and then it gave a re-entry. I took that entry. That one, it was at like a retest location because I have two entry models, a retest and a supply and demand. So I took it at the retest, was at like 50%. That stopped out. And then my supply or entry hit, and I didn't take that one, and that went to full take profit. So because I was tracking these things and just I can verbatimly spit it back to you now, but I couldn't tell you the trade I took last week because I didn't, document them and things like that. You know what I'm saying? So
Yeah.
I feel
Yeah.
like
Yeah.
it sticks with you more if you document your journey, and then you can look back on the growth that you make. I don't know. I personally have found that, documenting, it can be, being vulnerable with your trading is kind of rough. I'm not gonna lie, but it adds a certain level of confidence. And then at the end of the day, the result doesn't necessarily, okay, well, the results obviously matter, but it doesn't matter as much as the process, and going through the process of X, Y, and Z, whether it be recording videos, trading every day, whatever. I think the process is what people are attracted to. They want to see, how do you go from X to X?
Yeah. 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 Looks like the indexes may want to come down and fill their gap after a harsh rejection there.
The common sense investor.
I know I've talked about edge pool, but the gap fill is another report on here that I know is really popular.
Oh yeah. Wow, by
So
sheer
like this tells
coincidence,
you.
I was
So
studying that yesterday.
what's that? Oh, I'm looking. Hold on, I got the wrong
Just
section.
coincidentally, I was doing some study on that gap fill yesterday.
On gap fill. Oh yeah, so this is cool,
Yeah, yeah.
Brian. If you were checking that out, this is a cool report. So you can see. So this is over the last 6 months. We can put this further. Let's say last year. So this is futures. NQ, so kind of same thing as NAS. It definitely is the same thing as NAS. So you can see gaps get filled up or down over the last year about 60% of the time. 64% of the time, gap downs get filled, 61% of the time. And then you can look at this by size and weekday too. So certain days, Monday gets filled 69 or 67% of the time. So it's even more likely on a Monday. Tuesdays, 70% of the time. Wednesdays goes down a little. Gap downs on Thursday. 75% of the time over the last year. But yeah, so this is the gap fill. I know a lot of people play the gap fill trade, and clearly off of the stats you can see. And for anybody who doesn't know what a gap fill is, it's when the market gives you a gap like that, and then you trade to fill that gap. But yeah, that's some interesting data there. I know the gap fill can definitely be a high probability trade. I'm curious to see what we do here. We're at the overnight opening print right now. This will be our Asian session open on NAS. What's gold looking like? You guys watching anything? Anything setting up for you guys? What you watch?
Not here.
Yeah, I'm still waiting for some type of. I mean, I think that gold could sell down. Here, hold on, let me see.
Yeah, I can throw you up if you want to show.
Yeah, give me 1 second. I got you.
26.56.
Oh man, I'm torn on what I want to do. I'm up, but not as much as I wish I was. I'm gonna give it some time. Honestly, US 30 longs are kind of staring in the face, but I've taken a few trades already, so I don't want to rush anything.
I think that's a good mantra to stand on. Plus, you've had a solid day. How far are you away from the target?
So I let the other half of that position come down for a loss. So I'm flat right now. I have no open positions, and my profit is $1,700, almost exactly. So I think that's about halfway. Because what 3,500 I think is the target, right?
Gotcha.
Yeah, I mean, I'll be honest with you. My trades I've been trying to hold because I've been like trying to hit like I was hoping to get today. Like in my head, I definitely was thinking like, oh, if I can have a little bit of a bigger day coming into tomorrow, I'll only need to make $500 to pass, right? So that definitely but which I mean, I'm okay with how I managed it, but I definitely was aiming for the bigger winners.
Heard. What time is? Oh, okay.
And with the USD JPY short.
Yeah, facts. Teep, I'm gonna have to look up you and the Common Sense Investors YouTubes. Connect with you guys on there. It says, "Hey guys, thanks for the stream today. Had a quick question suggestion for news trading rule on swing accounts. Is this something I can suggest here, or should I email FunderPro directly?" I think that you probably should. I mean, obviously, you can ask here. The FunderPro team would be listening, but I think that that's something that you would have to more so take up with the management. They got a little more control over, all of that. But so looking at gold, I definitely think that gold can continue to go to the downside. I mean, we're coming off of all of this volume on this current 1 hour. The next 1 hour candle is about to close. So if I was anticipating how the next 1 hour candle would close based on the volume that we currently have, I would be looking for a move something along the lines of like this. Let's make this white. Extend it. Let's make it white. Let's move this out the way. So something along the lines of something similar of like this. Now, how we're gonna have to look is see how we react once we tap into this demand zone. Let me make this back blue and extend it right, and then like that. All right, there we go. So we're gonna have to see how price reacts once it comes back into this demand zone here, but a possible break below this low and a continuation coming off of this current 1 hour candle volume. How I would want to see that play out. We can see that within this area, volume is starting to slow up a little bit. Price is starting to give us a smaller time frame correction. We have some resistance in this level, and I just am not inclined to selling just based off of where we're at currently. If we get, let's say, a continued move to the downside coming off of this this current or this new 1 hour candle, I believe that now we'll start to see a fill to the downside. Me personally, I just would love to see a little bit of a steeper correction up, like price actually start to form higher highs and higher lows on this smaller time frame, even if it were on the 1 minute time frame, because you can see we're just kind of, well, we just broke through this area, but price has just been kind of trickling down here. I would much rather a full-on corrective structure and then a continuation or a smaller time frame market shift to get in on this continuation to the downside. Just being that where we're at, I'm not too inclined based off of this 4 hour resistance that we're kind of reject, or we had some type of rejection off of, and then these candles indicating that volume is starting to slow down. I believe a correction could potentially be forming. So ideally for gold, I mean, trading, man, I don't think that there was a real ideal entry for me today, just being that we had so much volume. Let me see how the 30-minute, yeah.
You got to wait till it gets to your level and play the price action, right?
Yeah. I mean, I would love to scale in on a continuation to the downside, but I just don't have a solid place to set my stops, and the risk to reward, looking to only target here or potentially these lows, depending on where my stop has to get set, it wouldn't be, ideal. It looks like I'll be looking at like near a 1-to-1 on the trade, and it would have to come after a 15 or a 5-minute close. So after this 5-minute close, if it broke through this, a continuation down, which would leave me like a stops of like, well, this might be feasible, because a 1-to-2 I would be interested in taking. But that's being that we close it below this level and then get the next candle form a top wick. The smaller time frame also shows signs of a possible correction. It's just slowing down right here. I don't really like this though. But as of right now, I just gotta wait on it.
Yeah. Flash over to my screen there, Tyler.
Ashton, before you start,
Yeah.
Brian, Ashton, I just wanted to address his suggestion. I totally see the point that you're making, and I do think that the 4 minute or 2 minutes before and after news, that rule that is put there, my assumption is that it's there for like the bracket order style of news trading that you see some people doing. So I think that's a valid point that you're making in terms of being able to close a trade that you've been holding for days or weeks, whatever it may be. So yeah, we can definitely try to run that by them, see if that's something they would consider. But sorry, go ahead, Brian.
Oh, no sweat. I'm glad someone's watching these viewer questions coming in.
Yeah, I just want to make sure we get to them. I don't want to let them get lost in the shuffle.
Yeah, no kidding. I watch them and then I start watching my charts.
Yeah, exactly.
I'm glad everybody's trying to be patient that has a question or statement for us. No, so Kyron was going through gold a second ago, and right now it's approached a 4-hour key level of mine. I stand strong by that one, and but when I zoomed out, and Kyron, I did this while you were speaking. I started kind of taking a higher level look at where all my past key levels are, and I know it looks like a lot, right? But it goes to prove price always travels level to level, and it looks like a lot of lines to some people, but you zoom into one of these and you see all the all the price action in there. Of course, I'm on a 15-minute chart right now, but we are at the going through a 4-hour on mine, which has already hit 3 times in the past, but approaching a daily. And again, when I have anything from a 4-hour to a weekly zone key level, I really stand strong on it. I'm waiting for it to either drop down here to my daily, bounce back up to that, what I would have called the weekly. I mean, it's going to go to one of those, right? So, but what I found interesting, because I hadn't zoomed out of this chart in probably a week, is that I kind of forget to, I think I was just demonstrating that I forget that there's so many key levels out there, you know? And I remember, I think it was Cameron on our team made a comment several weeks ago saying, "Oh man, you know, I just would have so many lines drawn everywhere when I start to do those zones." And he crossed my mind a second ago, because when I zoomed out, I thought, yeah, you know, you do end up with a lot, but when you really zoom into this stuff and you see what all types of price action occurs in these zones, that's why I fell in love with it to start with. But Kari, I was just a thing of interest here, that while you were talking, I was zooming out and I was comparing some of my more local lines to yours. I saw yours were a little bit different. It gets back to that subjectiveness.
Yeah.
And then ultimately back to why I said I like some of the points you made at the beginning of some of the streams in the past couple of weeks, because you shoot through quickly higher highs and higher lows and lower highs. And it caught my attention on some of the price action that I've been missing out on that I could have capitalized better. So I'm not, contrary to what I just showed on the chart, or I'm demonstrating right now on my chart with all these lines, I don't think I'm as prone right now to draw these out in the future. For me right now, I'm not redrawing much. It's just hitting all of my old stuff as it's coming down, you know. I don't erase anything. You got any comments on that? Do you redraw or relook, or do you like to watch them come back to some of your old zones?
So me personally, I like to keep my charts relatively naked, but I used to do that a lot, like, because I believe, and we talked about it a little bit on Friday, that how I used to explain how the market moves, and how I used to explain it is that it moves to magnet. It's like a magnet. It pushes and pulls to certain areas. And so, like, having those resistance levels from the past, those are areas that prices, how I see it is, everything from the past, she's given us some type of data, right? So all of those highs and lows are a confirmation at that area that price found some type of resistance. This is a magnet level, you know what I'm saying, that price could potentially come back to, respect off of. If it came to it, like the blue line that you have where price is kind of at now, you can see that after pushing through that line there, price did form some type of smaller time frame correction. It has some type of resistance after breaking through that previous low over to the side. So I think that having those levels are definitely great, especially visually, of understanding where price has been in the past. I generally just start the new day up with and mark my charts up with the closest levels. So I wouldn't go to the daily chart or the weekly chart and mark out weekly levels, because I don't look to capitalize to those levels, if that makes sense.
Yeah.
I would zoom out and look at where we are on the weekly, and then dial down to the smaller time frame and mark out, okay, this is my area of interest. This is where price has rejected off in the past. That's going to be my target profit, things like that. So I think that those areas are heavily important in terms of where we're at. I just like to keep my chart as clean as possible, so I don't have generally a lot of stuff on my chart, unless I'm trying to explain something. Generally, more so is visual for others than myself, I guess you could say.
Yeah, I'll keep mine clean on the most recent day or two on my. These things bother me when I start drawing lines, but I don't know if a lot of people know this or not. But you know, whenever you draw something out on one of your charts, let's say, like, you know, if you have several tabs open, I'll do this a lot. I'll you know, maybe I'll have a few challenges in a live account or two, but I do a lot of if I draw a key zone over here, I'll do a lot of this. I'll do a lot of copy, you know, and go over to your other chart, and you can paste it in and it'll go right to the same coordinates. So if I'm drawing something that I think is very specific to my trading style, I like to paste it into my other chart, because I used to find that, like, oh wait, I thought I drew that zone, or I thought I drew that level an hour ago or yesterday. And then, so now I'm in the habit of, I just do a quick copy paste whenever I draw something on my main charts. Sounds a little redundant, but it keeps me in check, and kind of also makes me kind of double think my key levels or zones as I drew it. I took the time to label it. Now I'm going to copy paste it over to another chart. Trade, well, I don't want to speak of other platforms, but but Trade Locker specifically, you can do that easily on. So all my charts really look identical. If I were to mark this one up with zones, because this is my 25K account, which I haven't really traded on much. Yeah, do you do that, Kyron? I do that a lot since I'm a zone trader.
What?
Copy paste. I just take my zones, man, and I'll take it, copy it, and then I'll go paste it into one of my other accounts charts.
Got you.
It'll go find the exact spot, which I like that feature.
Yeah, I have to see. I didn't know that. Let's see. Okay, so when especially on Trade Locker, when I switch between accounts, it naturally transfers over my chart as well. So my charts is already set from whatever account that I just tested it here just to see.
Not if it's a demo to live.
Oh, okay. So I'm in 2 challenge stages on Trade Locker.
Yeah. Good point though. I forgot to say that part.
Okay. That makes sense. Because the other platform that I was trading on, you have to set it up every single time. Like almost every time I hop on the chart, especially if I go to a different chart and try to go back to a chart, it doesn't save it. So I have to like reset it up every single time.
I hear you. Yeah. I'm always looking for any little efficiency I can get, or a copy paste.
Yeah. No, I hear that.
Tyler, how you doing on your trades?
Oh, not bad. I'm just watching still. I think it's an interesting divergence in the indexes. US 30 is just still super strong. I guess everything's starting to get a bit of a pullback now, but the NASDAQ came down and basically filled its gap. I can throw my screen up here. If we look at US 30, and let me go to a little bit of a higher time frame.
Scrooge came on and asked what Tyler was trading today, so I thought you could refresh.
Yeah. So so if we look at the indexes right now, I'm finding this interesting. I'm trying to decide if I think NAS is going to drag the rest of this down, or if it's going to start to see a little bit of a catch up. But you can see the gap that US 30 had right overnight and how strong we've been. Obviously, we're now getting kind of a stronger pullback, but nowhere near coming down and filling the gap yet. SPX was holding up better than NAS. You can see we have the gap here. It was holding up. Like I said, everything's starting to get a little harsh now. So it looks like, but you can see NASDAQ came down to fill the gap. So NASDAQ kind of leading the way in terms of a pullback. That being said, this level between my futures level is a little off. So we did just come down and tag our levels. So this would be an area that I would be looking for NAS to hold and consider some long off of, since we filled the gap. But I'm kind of torn right now. I'm torn if I think NAS is going to keep dragging the other indexes down, or it's about to play a little bit of catch up after closing the gap here. So that's what I'm keeping my eye on. I'm open to NAS longs here, but I'm not married to them yet.
I like listening to you and Samuel and Cameron talk about NASDAQ, because Yeah, I'm such a gold trader. So I've been listening to you guys on the side, just picking up little nuggets of information, so it's helpful. And a point that I think it was Samuel said in our probably one of our just private chats we talk about when we're offline, not streaming. But to watch oil this week for longs, Samuel caught my attention on a comment he made somewhere during the weekend about watching for oil, and I started looking at that more heavily over the weekend too. I think there's a lot of opportunity for oil possibly over the next year. I want to learn more about its price action.
Yeah, I don't think it's a bad idea. I looked at it a little bit. I like how tight the spreads are on the indexes. I'm deciding. I'm really contemplating along here, but I don't want to rush into anything. The Russell is really the strongest index that we have. Thinking about scaling in smaller size, being willing to take an additional entry on this one.
Scrooge, no. Currently, I'm not in a gold trade. I saw an opportunity during the Asian market. I would have held it all the way to probably, with no news today in the U.S., I would have held it all the way to now, at least a portion of it. I mean, earlier I stated I do these 20 pip exits. I'm going to take profits, but sometimes when a candlestick's just too large, I'll let my last 25% just ride. And I didn't know oil fees are really high, Scrooge says. You guys know anything about that? I haven't really looked at the fees yet.
I was saying before, when we were watching it, I think it was maybe last Friday when Sam was on, and like the spreads are way wider than the indexes, and that's just, I don't know, that's just something that makes me, that alone is something that makes me want to stay away from oil. Not that you can't still be profitable on it, but that is just like kind of another hurdle to get over. Not only do you have to be right on the trade, but your entries are going to be way less precise with that spread.
Yeah. Crude oil.
So that's why I'm sticking with the indexes. I did try a very small 0.02 lots on a NAS long that I'm willing to scale into. Part of me thinks I should have just taken the US 30 long, but we will see if I regret that or not. I think you guys have heard me talk about, but it seems like over the past couple of months, sort of the Russell and the Dow, so YM and RTY, when you're talking futures, have kind of moved more in conjunction with each other, and then kind of NAS and SPX have kind of moved in conjunction with each other, and they've sort of every now and then you just notice like today, like the Russell and US 30 are both holding up pretty well, while the other two are getting the harsher pullbacks. It's just been an interesting thing to note. But the overall strength in the market, I think this is a good place for NQ to hold. So
yeah, I took
I'm okay with giving it a little stab here.
I took a relatively small trade on gold on this account. I just want to see how it reacted. It was having a nice, oh sure. It was having a nice reaction off of this. Now it's looking like it's pulling back on me. So what we got was that push down that broke through the low, and then the 15-minute candle started, pulled up, created a high, retested the area that I was looking at for the smaller time frame, and wanted to see a continuation. Now I told myself that this would likely be a break of the low would be my target, but I am actually just going to hold this trade to that first level of resistance. If we are able to hold this trade to that first level of resistance that I had mentioned there. And since we just already had so much volume to the downside, I took this at a small position, just to see if we can't get a continuation of that volume to target that larger time frame target. But I'm just gonna chill on it for now and just leave this.
Well, heck, with the way gold's been reacting, you could see something any minute.
Yeah, no cap. So I'm just gonna wait on it. Be what it is. I hope they hurry up and give me my accounts back. But I'm gonna later today is likely when I'll get another account with FunderPro. And then I'll just document that, like the start to finish of it, man. That's really what I want to do, is just document the journey of it. So I think that'll be fun. It'll give us something.
Over there on your channel.
Yeah.
That's great. Yeah, I'll definitely mention to you guys and viewers if I start mine. I'm pretty sure I am, and I have nothing to hide on trading it. I anything that's ever made me money in the past or passed a challenge, that technique works. And might be not the greatest time to do something like that. I cringe once it's like December 1st, man. The market's just, realistically, if I was going to be accurate, I'd say don't trade between December 15th and January 15th. That 30-day period is nothing.
The 30-day period is rough, and then it's like the markets are closed a lot there in that.
Like, you can do the holidays and everything. Lower volume for sure. A lot of traders start to take more time off. Common sense investor, I agree with you. I wish TradeLocker had that grid view, especially as somebody who likes to watch SPX and NQ and NAS and all together. Somebody who likes to watch all the indexes at once. I would love if they had a grid view so I didn't have to flip back and forth. Hopefully that's something that a feature they'll add. I did add a second position into my NAS, my NAS long.
Oh, you can share it. I think if they did do that, it would be dope, because I'd be able to look at multi time frames. Like, I wouldn't necessarily look at different charts, but I would look at different time frame analysis.
Yeah. So when I'm watching on TOS, I watch I watch ES, NQ, YM, and RTY, and I watch ES and NQ since they're what I more actively trade. I watch those on the 2, the 5, the 15. And like the hourly at all times. Like I have all of those charts up, and then I keep like the 5-minute chart, 15-minute chart, like one or the other. Like I'll switch on YM and RTY. So yeah, I get to watch multiple time frames as well as multiple things. So yeah, my grid, I think I use 1, 2, 3, 4. So I use like a 12 chart grid typically. So I'm going to show the 2-minute. 2-minute kind of starting to give us a little bit of a flip, which is why I added another small position in. I'm in with 0.04 total right now. We got a little push, kind of started to hold this 2-minute. So I took another little entry here. We'll see how this one plays out. We've had some pretty decent movement in the market so far, where in the pre-market we kind of got that big push, which then rejected pretty harsh. So a couple wide swings so far. In the NASDAQ and the indexes, I wouldn't be surprised if we get kind of a little bit more consolidation down around here. Obviously, I won't complain if we bounce strongly, but I wouldn't be surprised to see a little consolidation around these levels before we start to make a move one way or the other. But ultimately, I remain bullish on the higher time frame, so we'll see. We'll see if we continue to push higher or not. I will say though, I do think like the kind of the euphoria around the bull run and the crypto and just markets in general that we've had in the election is getting a little too high. It feels like every single person on social media who's involved in investing and trading is talking about, oh, we're about to go on this crazy bull run for the next 4 years. And that just feels too easy to me. That's like, to me, that's like the one thing that has me slightly bearish. It's just the overall feeling around the market since the election just feels too euphoric, in my opinion. Yeah, NAS has made some good moves, man. Some good swings, good rejection of.
I plan on starting to trade NAS here.
Now we're holding a lower level.
I got taken out at break
Yeah,
even.
hey, yeah, I don't know what you're doing after we in the chat. The boys were talking about kind of the level system, but yeah, if you want to hop on, we can dive into that a little deeper. Yeah. It's fun. It's good. It's fun to trade, man. Especially if you're not finding setups during like the New York session on gold, right? I would definitely suggest taking a look at NAS or any of the indexes. SPX will move good. US 30 will move good. Any of them honestly work.
If you don't mind, I want to kind of break down why I moved stops to break even and why I was so quick.
Oh, I'm game
to move.
Let's hear it.
Okay, so I moved stops to break even on this trade specifically because, all right, on the previous, was it 15? Let's go to the 15. The 15 showing the signs of rejection. Okay, so we had just broke through the previous 15-minute low, and we're starting to reject. And I know that on the smaller time frame where I'm at, that this is relatively slow market movement, right? We broke through this low, we pushed up, we broke through this low here. So if this on this 1 minute time frame remains in a bearish structure, it wouldn't have broke through or above this high up here. So after we had taken out the previous 15-minute candle low, which was right here, I went ahead and moved stops to break even. We already retested into this area once. So price, if you kind of see how this, let me clear this up some. And I can more so explain. So price, let me see here. All right, so we broke through this low, came down, created this low here, retested this high, pushed back down, and with this move here, we broke through the low. So then price corrected back up to this demand zone, and we got a rejection off of that area, which then pushed us down steeper. Now, I knew that if we started to get a break, above these highs, which was relatively around my entry, that price could probably break above here. Just understanding that, one, we had an impulsive move to the downside. So if we take a look like on the 5-minute, I mean, and we were already talking about this. We have this huge impulsive move to the downside, and that volume was beginning to slow up within this range here. So I knew that we could start to potentially range, and I also knew that I took my trade off of a smaller time frame target or a smaller time frame, continuation to a relatively rough target here. So that's why I was quick to move stops to break even, because at this level, if price wanted to continue pushing to the downside after breaking through that low, I had about a 1 to a little over a 1 to 4. It wouldn't have to come back up above this high here. It would just continue pushing down with volume. And we're just starting to see, and it still can. So it could be just in timing, because this 30-minute candle is about to close. Now, we've seen these previous candles, they're showing signs of rejection here, but this 30-minute candle is about to close. So if we can see maybe that wick fill and continuation to the downside, I think the continued move would be good. The trade that I took, though, is for the specific entry and stop loss was invalidated by this high getting broken here. So that's why I went ahead and moved my stops to break even. Well, I moved my stops to break even after we broke through this low, because I anticipated this potentially happening. So it's not that this move can't push to the downside. I think more so the timing of it will be dependent, and you get a better idea of what it will look like after this 30-minute candle closes here in the next 34 seconds. I think that would be a better plausible entry for a continuation to break this low. That, or we can get a, start that corrective structure. And I would much prefer corrective structure, something similar of this, and then a smaller time frame shift and a continuation down. It'll offer a better risk to reward. We'll have gotten a pullback from this impulsive move here, and that would be a better setup. I look to trade from these levels here back into the down move if we do go ahead and get that. So that was the reason for closing. I just wanted to break that down. Sure. Why I moved stops to break even.
Nice. So you're flat now.
Yeah. At least on the day.
Yeah, I got you. So the NAS longs are starting to work. Could the US 30 trade would have worked too. By the way, if you're wondering why I went, like, you'll hear me talk about something called relative strength or relative weakness, right? So NAS was basically the index, in my opinion, that was showing some relative weakness just based off of its gap and how it basically came down to fill its gap, and the other indexes held their gap pretty strong. And so US 30 was, to me, showing relative strength. What am I on, the 2-minute? So when I took the NAS longs, I was also watching, we were on this 5-minute candle right here. So holding above the opening print, kind of holding, and I considered going long on US 30 here based off of it having relative strength, and I'm looking for a long trade. The reason why I didn't is because US 30 is making all-time highs, and I have no price levels up here to work with. So this is the weekly chart on US 30. As you can see, it's making new all-time highs. So I didn't have any levels basically to work off of with my system, which is why, even though NAS had been the weaker index, if you just look at, the weekly, that we just opened the week, right? And so we just looked at the US 30 weekly candle compared to the NAS weekly candle, but it would, look the same thing on the daily. So that's kind of a good example of relative strength versus relative weakness. And since we know NAS and US 30 are indexes of the stocks, basically what that is telling us is that stocks that are in the NASDAQ are currently weaker than stocks that are within the Dow, basically, right? But the reason I took NAS instead of US 30, which, like I said, I may end up regretting, is looking that way, is that I have these levels in play here. And I like to take my trades when I have levels in play. But yeah, so that was kind of my internal debate that I had when I said I kind of wanted to take the US 30 longs. It was based off of the relative strength, but the reason I went with NAS instead of US 30 was based off of the levels ultimately, which right now is looking like not the right decision.
Wow.
But all good. I still think she can hold. Like I mentioned before, I wouldn't be surprised to see a little consolidation around here. Wow, I didn't even realize that's such a strong gap on US 30, man. She just is ripping the new highs.
I definitely need to start eating before we come onto these streams.
That's funny. I thought that earlier. I was like, man, I'm hungry. Yeah, so bit of a 15-minute 3-bar play to the downside. Kind of playing out. Although that's an outside bar in here. What am I looking at, actually? Yeah, it is an outside bar. But the 15-minute, we kind of put in this trend bar, this green hold bar worked as a little bit of a 1, 2, 3, 15-minute pattern to the downside. So that's something to be wary of for myself. But I'm just I'm holding it still, seeing if these levels can hold, see if we can get a little consolidation before making another move back up.
I heard. I'm just gonna have to wait for some larger time frame gold movement to get a better.
Scrooge, sorry, to answer, I just saw Scrooge's question. How do we deal with giving back profits after, he said, let's see, how do you guys deal with give back after a good or a few good trades? So a rule of thumb, Scrooge, to be honest with you, is less is typically more. If you've had, 1 or 3 winners on the day, just a rule of thumb is you're probably better off to just turn off the screens and go touch some grass, protect the profit, to be honest with you. Because the more times you expose yourself to risk, the higher likelihood that things start to go wrong. So in order to avoid it, I would, potentially lock in a win or two or whatever it may be that you're happy with and call it a day. Now, if you do it and you give back your profits, I think that is an easy formula to spiral, because you're feeling good. You go from having kind of the dopamine hit of putting on risk, locking in some wins, being up for the day, feeling good about it. And then you talk yourself into, hey, I'll put on a little bit more risk, and maybe you get stopped out quick and you're like, shit, let me try one more time. And then it's, shit. You take 2 quick stops and maybe they're small, but now you're like, well, I got to get back to where I was. And next thing you know, you're spiraling, you're ending the day red. So it's that's like really the slippery slope in trading is when you've won, you have the dopamine, you have the euphoria of feeling good about those wins, and that's when, at least for me, that's when the decision making process can start to go the wrong way. So, I
had a cure for that for myself a while back, a long time ago.
What was that?
Draw, like, take a piece of paper, draw 10 circles on it. Just right in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Draw a line through the middle. You got 5 on each side. One's going to be for losses, one's going to be for wins. Okay? Expect, and then just put a little checkbox in the circle. You take the losing trade, put a check on the losing side, right? But have those pre-drawn losses and wins sitting there. It will happen. Maybe it's for the, depending on what kind of trading you do, maybe set that up and say, hey, I take 1 to 2 trades a day. This is going to be for, 2 weeks here, 1 to 2 weeks. When you start seeing that, like, oh, I have 5 wins and I have 3 losses, 5 wins, 4 losses. But draw out what your losses probability it's going to be. Project yourself to lose 30, 40, 50% of the time. And if you can pull out profits by losing 50 to 60% of the time, it proves you're a great trader, because the best traders are the best losers. And that means, risk management. If you're able to, I think that takes extreme discipline, but that's how I once finally got to that point. I had to pre-draw my losses and wins and say, there's going to be some on both sides, period. But something did that for me, just being able to see it in the forefront.
I think that's a great piece of advice. Scrooge said, have you been secretly watching me trade, Tyler? Which is funny. And no, it's just because I've been there, man. And we all do. Most of us do the same thing, right? When you're going through your trading journey, where the same things happen to us. And so I've been that guy so many times. I can just relate to it so well. And what Brian's saying, I think, is a good point. And anything like that, where it's like, you kind of like make your brain sort of stop or cut the process, like in between trades, where it's like, okay, you took a win or a loss, you kind of got to cut and go to your tablet and check it and physically kind of remove yourself for a second. Kind of that interrupting your pattern of thinking, I think can be a beneficial thing to do. Whether it's that, my trading mentor, I know he would set alarms on his phone, would just go off. That would be like mental check-in reminders, right? So it would be, 5 minutes in the day, he had an alarm would go off on his phone that would say, hey, it's only been 5 minutes, relax, check your mentals, how you feeling? And then another one 15 minutes in, hey, it's only been 50 minutes, check your mentals. And so I think doing something like that in between winning or losing trades, I think just putting the focus on taking a step back every now and then and kind of resetting your mind is a good practice for traders to have in general.
For sure.
I agree. I generally try not to think about like losses as giving back to the markets. Like if I have profits and then I end up, losing it and wind up at break even, I never really think of it as giving back to the markets. More so, I'm more concerned of why this trade didn't work. Like, why didn't this trade work? And then I remain confident because I know that, like, I've had times where I've been down, I've had 3, 4, 5, 6 losing trades in a row, and that 7th trade make well more than all of those trades combined that I lost. And so I don't ever really get bummed about losing it. And even losing losing streaks, they definitely suck. Like you feel that pain, you feel that anxiety and stuff once you're on a losing streak. But to me, I never really worry about it, because I just know that, for one, I'm gonna do this. Like, okay, this is how I look at it, or I try to look at it. I plan on seeing myself trading for the next 10 years. So I look at one loss in an individual day, and I look at blow up my trading career for the next 10 years. And I think to myself, is this loss really going to affect my next 10 years? Like, you know what I mean? Am I going to stop trading? No, I'm not going to stop trading. Okay, cool. So you're not going to quit. So you're going to continue to do this. And then, just let it, I don't know. For me, I try to be as little emotional about this as possible, and just remind myself that I'm playing a long-term game, and that the more that I do this, eventually this will all turn out great. You know what I mean? So like, that's just was my plan when I first started trading. It's been harder to do, or it's harder to do when you're first starting out. I never really fell into that whole revenge trading kind of thing. I mean, I've taken revenge trades, but they were managed. I've never like full ported a counter or nothing like that.
You're missing out.
Oh, bro.
I have,
You're missing out.
my anxiety can't take it. I already feel bad if I revenge trade with 1% risk on the table. I'm like, oh man, this is coming up on my risk for the day. But
my revenge trading typically is less about oversizing. Don't get me wrong. I'm sure I've like increased my size on a revenge trade, but it's like I more go into like rapid fire mode, where it's like, it's like, you know what I mean? It's like, you're just, maybe you're flipping bias, or
I have been there
on one direction, no matter what, you know what I mean? You keep trying to catch the falling knife or whatever it may be. But yeah. If you've never had a good, me and revenge trading, we're like this, bro. That's like,
and you know what's crazy about that? Like, I feel,
I like
this is why I kind of had to implement this into my trading. I feel like after 3 trades, like my mind and body can't physically, like I can't handle it. Like you said, I'll start flipping biases, and I'm like, all right, you know what? Maybe, especially if it's, let's say I took 2 losses, right? Now I'm starting to think like, okay, is it buying, selling? I become less confident in the trade that I'm taking. I'm just forcing it to try to get certain. So I have had that before for sure. That's why I limited to like 1 to 3 trades a day, because like that, I don't know. I think I'm just emotionally drained to where I can't like look at the chart subjectively. Like I have preconceived, I want and need this to X, Y, and Z to happen.
So I
think the long-term mindset like you have is really big for that. I think that's the fact that you're able to have that is, I think that I lose sight of that. Like I just, when I'm revenge trading, my focus literally becomes about this very moment that I'm in, and not about really I lose sight of the long term. Essentially, is what's happening, right?
And how I view it in those times is like, I'm so like, I'm okay with taking 1, 2, maybe even 3 losses in a day, right? Nothing more. Anything outside of that is just outside of my trading plan. So it would be undisciplined for me to take it. So I know that if I take a trade after that, that's just undisciplined trade, because it doesn't abide by my rule. But my thing is, I don't want to undo too much in a single day. Like for instance, I don't want to get into that spiral and wind up having 1 day of revenge trade and just blow my account or something like that. You know what I'm saying? So I have to.
There's a really good math I want to show you if I can find it.
Oh, you're good.
Keep going.
So I just think about it.
Keep going with your.
Yeah, no, you good. So I just think I have to think about it in the long term. And for me, it was like, okay, well, there's no other plan B. So, you're gonna lose. You lost, it sucked. Yeah. But are you gonna quit? No. Are you gonna cry about it? You can, but like, that's not gonna change that I'm still gonna do this for to the ends of my days. So it's just something that I try to get myself numb to it and just have the confidence in myself that in the long run, all of these things will work out because, just in the short amount of time that I have been trading, it's just been, I've just seen so much growth in the past couple of years that I know that if I continue doing it, there's no way that I don't get better at, handling my emotions, better at managing, better at identifying the charts, identify entries and exits, connecting with other like-minded individuals in the industry that's going to help push me to be better. Like there is no plan B. Like there's no going
Yeah.
back with me for when it comes to trading. For me, trading is like going and has been the like center of all of my endeavors. Like for instance, I have a couple businesses myself. And I would use that to fund trading. And now it's gotten to the point where I use trading to fund other investments and things like that. So like, looking to join and get my real estate portfolio up, different things about social media, looking to grow in that area so that it can have a positive effect on my business as well. So I use trading as, to me, it's like a money glitch. Like, okay, I'd spent all this time trying to learn how to, essentially have my money make more money. And now that I have this skill, for one, it can't get taken away. Like, God forbid something terribly wrong happens and I can't use my limbs or I forget, like,
You better wear a helmet, bro.
yeah, no, facts. But like, God forbid anything crazy happens, I always have this skill. So I don't know. For me, just knowing that alone, and it gives me confidence that no matter what happens in the individual day, it doesn't matter. Like I'll eventually reach my goal of making $1 million in profits on trading, but it's not gonna come. It comes with discipline. Like I know I have to be disciplined in order to reach anything within this trading. So for me, I kind of like the process. Losing sucks, but it's a part of the process. It makes you, I feel like, a little mentally tougher, and you know I don't know, trading just forces me to be a better person, so I couldn't part ways with it. Like I don't know that there is anything else that I would do. I mean, obviously I want to get into film and creating more educational videos to where they're visually appeasing and I can get the message off across, but trading is always going to be like that center for me. Maybe in the future I'll I don't know. Even I just would only see myself funneling money from whatever it is that I do in the future into trading, just to continue to have my money make money, because it's a skill that, can't get taken from me. So I don't know. That's just how I feel about it. Oh, it looks like we lost Tyler here. Hopefully we can get him back here in shortly, or we'll have to see. He'll probably message us in the back end. But what do you feel, Brian? How long? Well, for one, how long have you been trading? I know you said it's been a couple years for you.
I was doing some my real day trading started about 10 years ago. So 10 years ago, I was trading stocks. I was doing a lot of, I had about 10 blue chips that I was watching, and I would day trade those on the 5 and 15-minute chart. I did that a lot for about a year, but I told my story once before here. Nothing to brag about on back in those days. Just a lot of break evens, a lot of learning. Fortunately, I didn't lose my ass.
Yeah.
But then onward and upward, as you mentioned, as you develop the skill, and where that skill set is nowadays for myself, I agree with you. It's something that you say, well, you could do this the rest of your life. You could, if you have a real 8-to-5 job, you could, it's something you could do, if you were to lose your job, or if you were to quit your job, if you were to, for older folks who may be, looking at retiring, do you have enough money to retire? I look at it like, I've yet to have a bad day where I didn't want to come trade.
My back.
When you go to a 9-to-5 job, you're like, hey, I want to go to work today. But I've never had that with intraday trading. It's even if the market does poor the day before, it doesn't make me not want to come back. I think I like the problem solving. I see trading as a puzzle.
Yeah, I agree.
Yeah. I don't like to listen to too many people and their strategies, because not that they don't know what they're doing, but you can clutter your brain with an overload of information. So through time, I've learned to just study off one or two people if they have similar techniques. But the longevity of trading, like you said, is out there, and it's something you could do, with 2 broken legs and a broken arm.
Yeah,
but you still, I still prefer to have one limb usable. But hell, there's even ways they're developing in computers now where people can do things with the movement of their eyes.
So Kyron said something. Hopefully my video will play smooth enough for you guys to see this. But Kyron said something that made me think of this math cheat sheet for traders, and it was basically something along the lines of, you try not to dig the hole too big in one day. And if you look at this drawdown to recovery rate, I think is a super eye-opening thing for traders. Because if you lose 5% of your account, you got to make 5.3 to get back to break even. If you lose 10%, you got to make 11.1. Lose 20%, you got to make 25, and then this just starts to move up exponentially. If you lose 30% of your account, you need to make 43% to get back to even. If you lose 40%, 67, 50%, 100. 60%, 150, 70%, 233, 80%, 400%. In order to get back to break even. So the idea of not digging the hole too large is, I think, super important when it comes to trading, because the bigger you dig the hole, the harder it becomes to get out of. 100%. The math just lines up on that one.
Yeah, and especially in a singular day, like I wouldn't want, to take a week's or month's worth of losses in a single day. Like that would set me back, because I still would have to abide by my system to grow. And like you said, you need to make all the much more to get back just to break even, because then you got, well, for funded account, or for these accounts, I guess you could say, not as much for futures, but then you got spreads, you have fees, certain different things like that you have to account for. So you wind up losing more than just whatever it is that you risk on the table, and those fees begin to add up. Trust me. I think on this challenge account, I got like over like almost 2K in fees. Yeah.
You from like the trades you're placing, you mean? Like
yeah. Because it's like, it depends on the lot sizes that you use. So like on a 100K account on EURUSD, utilizing a bigger lot size, 10 to 20 lot on a smaller time frame, those fees rack up. That's for sure.
Yeah, for sure. I noticed Sam said in the chat earlier that he hopped in Bitcoin longs. This was about 25 minutes ago. 30-minute demand reach, and it looks like that probably played out nicely so far for him. I had a level here on Bitcoin. I was watching it too, but I held off on it. But Bitcoin getting a nice bounce.
So
nice trade, Sam.
I jumped into gold a little while ago.
Oh, nice.
It's on my.
You guys were probably stuck when I left. You couldn't put your share. I don't know if you could put your screen up or not.
Oh, it's okay. No, I took this trade, Kyron, because I was watching these candles on the 15-minute, and they were holding so strong on the bottom of their bodies right there that upon this candle at 9:30 my time, when it broke through that line, I went ahead and jumped in on a short. This is my FunderPro 25K demo account. But I think I'm going for just between levels there. Well, no, I'd say between, what were we? at a 4 hour. So that just looked like I'm going to see what it does. I have my stop pretty tight right there. This is more what I would call just straight candlestick trading here. I don't consider this a break of structure, really. There's just not enough action going on for me to consider that anything but what retail traders, what do we do? Consolidation moments. I don't call that institutional trading, but I see this candle breakout, so jumped in that trade.
Nice.
I look for stuff like that when it's plain as day, and I'm just seeing like candles stacked perfectly. Sure, I'm going to go ahead and take the break of that.
Yeah, I mean, if you scale that down on like a 5 or 2 minute, I'm sure what you have is a 5 or 2 minute bear flag. If you're a pattern trader, to me, that's like a solid 15-minute sell setup, a clean 5-minute lower high. Yeah, I think that's a solid trade.
Yeah, Kyron had it on the 5 minute, so I was sort of watching his chart for my 5, and I was watching
I was just about to mention it's crazy that you took that trade because I was hesitant on taking it. Because if you see that 5-minute candle that's at the top near your stop loss,
the wick,
just the 5-minute candle, just in general, that's near your stop loss. That one. After that candle closed, that was the first 5-minute candle close that started on the new 30-minute candle. So I was anticipating that to be the top wick of the 30-minute, and I was going to sell right after that candle and just look for it to fill down, kind of like how you took your trade there. I would have got in on that next 5-minute candle, and I was just sitting here hesitant because volume has slowed up so much. I was like, all right, are we going to get the push on this 30-minute continuation? Which is exactly what I had broke down that I anticipated that price would do, form a top wick and fill the 30-minute wick. So when that 5-minute candle aligned, I was just hesitant on it and didn't pull the trigger, but glad you were able to at least pull the trigger on the relative move.
Yeah, totally. And I'm going to actually profit out right there on one of them halfway through my take profit zone.
It's crazy that you had mentioned that because I'm sitting here and I'm drawing it up as that. I have it drawn up and I'm just looking at it like, man, I should have. But
and now if I was on my 200K account, anything like that, my personal accounts, I would have not taken that trade. Honestly, this is something where I'm on a lower based account. It's demo.
Low risk.
Those are some of the differences between my demo trading challenges versus live trading. But I want to say, I always do better on challenges and stuff. So when it's not real money, I seem to do better because I do take these.
Having a little bit of that just like spend it mentality, yeah.
And that's part of the reason why I was prone to or gravitate to doing a 200K fast track challenge with FunderPro on here, or in at least again, a lot of those trades are going to happen outside of the live stream, but to show them whenever we're back on, because I know I'm going to have better performance moments on that demo account, and we all struggle with stuff, and that's something I'm always struggling with. If I take something that I say like a moment ago, oh, this is not a trade I would have normally done on a live account. Well, but it is a trade that I did calculated risk, based on how often I've seen it in the past, the setup. It's not really my setup, but I've seen this happen too many times. It might reverse right now, but as a matter of fact, I'm going to bring my stop loss in. So I just do this. This is the difference in trading. And I'll tell you what, I'm actually would pull this all the way in right there. I'm not going to lose money on that trade. So I'm not in the.
I think that's a great way to manage risk and trade.
Yeah, and me personally, like kind of to talk about what you were saying and trading your demo account versus your fund account a little differently. Likewise, and this would be the trade that you took would be a trade that I would at least scale down on in positioning if I were to take it on my accounts have been, migrated. But if I were able to take it, that's something that I would bring on my 200K account. I would risk 0.25%, 0.5%, something along the lines of that for that continuation. And then $500 to $1,000 risk is still a substantial 1 to 3 trade, 1 to 2 trade. That's still a substantial, or a good amount of money or profit.
And I noticed that when we're on trading, and I don't know if it's when I've streamed with you guys or other folks here, but I've seen a couple of viewers ask this question: how do you know how much, or how would you know the percentage of gold going in on gold versus going on some other instrument? And I got to bring to people's attention, when you open TradeLocker, when you open up your buy sell widget here, you always get this percentage right here of margin, of how much you are going in, and I use that as a gauge. I don't like to go in on anything more than 5% like that margin. If this was a 200K account, well, then naturally that would have been about what, 0.5, I guess, of a lot size instead of 0.05. Now, when I say that, I mean, I almost said it wrong. That's per piece that I'm managing. So what I'm really saying is, overall, this is the number I'm watching when I enter a trade. So I don't get flustered. There are times I go trade, euro for just a moment or another thing that that I don't trade every day. But I look at that as
my bad. I didn't mean to cut you off.
Go ahead, man.
If you hit the risk button, that's what I generally do. So like that risk on the here actually.
Yeah.
Are you normally over here and you hit this risk button?
Yeah. So
you don't even need to open that. It'll give
I
you
was about to say, you can close it down. You can close it. The risk button is still there. But generally I'll hit the risk because it'll switch it to dollars. So it'll change it from lot sizes to now being dollar amount, so that wherever you set your stop loss to, it'll just put in that dollar amount, whatever that may be.
Yeah.
So I think that's one of the things that I like the best about TradeLocker, because a lot of these different platforms that you can trade on, they don't show you like, well, for at least for me, because I traded on like DX Trade or things like that, and you're not able to like drag your profit or your take profit, your stop loss, and see like how much it is that you're actually risking on an individual trade. So I used to have to use like a risk calculator or a lot size calculator to make sure that I had the right amount of risk on at a certain time. I actually had it on my trading view just so that I could implement it real quick. But this has been much faster for me. And I even tried like things like the magic keys. I talked to Roger Banks. He sent me one of these back in the year, but I've only used that like once or twice, because as soon as I got it, MetaTrader shut down or started revoking the licenses of many different brokers. So it's been relatively just a paperweight for me because I can't use it.
Hey, I like everything you said about that, and it's just bringing our viewers to understanding that this thing exists. It calculates for you, and I'm right on with what you said. It's a gem. If you use it correctly, you can certainly use it to your advantage and stay consistent. Especially if you're jumping assets.
Yeah. Yes, I agree. Because the lot size does vary depending on what assets you're trading. To just talk about Nikhil, to answer your question, I will say that I have seen, and I did this at the beginning of the year because I used to trade all of the USD pairs. His question is, trade only gold will increase profitability. He's asking, will trading only gold increase profitability? And at the beginning of this year, I went through my trading journal because I used to trade every USD pair. So GBP USD, AUD USD, USD JPY. I think that was like my starting 5. And then AUD JPY, GBP JPY, EUR JPY. And I went through my journal because I have a journal that documents 3 years of trades that I've taken. And so I went through it and I just looked at what assets were the most profitable for me. And I found that gold and EURUSD were the most profitable assets for me. And more recently, I've only really just been trading gold, and I've seen an increase in my profitability since making this change, 8, 9, 10 months back. So I will say that, and only I would say it increased my profitability because the price action on gold is so clean. We have a lot of volume. We have a lot of volume. And so the price action is generally pretty clean. And so it offers great risk to reward moves and easy setups to identify EURUSD and some of the other USD pairs. I'm not going to say that they always are ranging, but they kind of range more often, shall I say, than I would say it is on gold. So I've just kind of, went over to gold. And that's why I also would look to add Nas into my portfolio as I start to trade on the future side, because Nas is like the same way. It's, I believe, cleaner than gold at times, especially during the New York session. Nas offers a lot of good risk to reward setups and just has a lot of volume that it trades with. You'll see a lot of big name traders or a lot of bigger traders in the industry. That's what they trade, Nas 100, US 30, those assets.
Yeah. I gave a smiley face, not to mock you, but I was agreeing with you.
You're good.
Animatedly wise, I was agreeing with you. Like I think you're spot on right there.
Yeah. So to kind of put my 2 cents in there, obviously I don't trade gold. So I would say the statement to only trade gold to increase profitability for me is not the case. But I think Kyron made a very good point in tracking what you do trade. And if you do trade multiple things, if the data shows you that you're much more profitable on one of those things, stick to that, because clearly that's what you're trading better than anything else. But for me, that's NAS. I trade indexes. And if you are interested in trading indexes, NAS and US 30 are going to be more volatile. SPX is going to be a little bit more tame if you're somebody who, in terms of like the leverage, is lower on SPX. Like so if you're using a small position size, you're typically going to have smaller risk with SPX. Well, I'm still holding my NAS position here. We're kind of bear flagging on the smaller time frames.
Let's see that. Can you put it over there?
Yeah. So this is actually a 2-minute, and to be honest with you, like I would call this more of a bear flag than I hope it turns into an attempt at flipping trend, where we've made this move down, set a low, set a higher low. We did get a new high here, but more than that, I think we're just kind of ranging. And I think you could call this a bear flag. So I'm in this trade still, but my conviction isn't super high right now. It's not super low either, because we are currently holding the levels, but I'd like to see us start to make a move upwards here soon. But I mean, to me, a flag is just a move followed by a period of consolidation. So if you're somebody who likes to draw flags, you got move down followed by this period of consolidation. You could call that a bear flag, in my opinion. So I'm staying ready to exit, but I'm still in for now. I wouldn't be surprised to see another leg down on this, but I don't want to get rid of my position too early on stream. The last time I took a trade like this, I gave it a little bit of room and ended up working out. So we're going to do the same thing here. I think we're only on for another few minutes. Does anybody else have any questions before we hop off? Any Funder Pro questions, any trading questions that you guys might have? Any feedback for us before we wrap today's stream up? We appreciate you guys all tuning in. Somebody asked for a coupon code. I did share my coupon code in the comments if anybody's interested in that.
Is that at 15 or 20?
I think it's 15. I do word on the street is we have a end of the month Black Friday sale that's coming, so keep an eye on the social media accounts for that. I'm not exactly sure when that's coming, the exact date, but keep an eye out on wherever you follow us on social media. Keep an eye out on that.
We have futures with FunderPro coming soon. I'm definitely going to be interested in that. I still have some learning to do, but the charts are the same.
Yep.
I don't know. I wonder how many viewers out there would actually are interested in that or looking forward to that.
You have sorry for the name pronunciation. I don't mean to mispronounce it, but it looks like Ravindra. Hopefully, I said that relatively decent. It's the wrong one. So it looks like you have the $5,000 account. Send me the drawdown on that account, Ravidra. And to be honest with you, $5,000 account, my suggestion, without even knowing what you're trading or what the exact drawdown amount is personally, I would probably trade 0.02 lots for the most part. And I would do that is because that's a smaller account size, so your drawdown is going to be pretty tight. And the reason I would trade with 0.02 lots, because that gives you the ability to trim one of your lots in profit, move your stop loss to break even, and hold a runner. And so I don't ever really like trading less than 0.02 lots, or if you were trading futures, it would be 2 micros, just because the ability to hold a runner and catch some bigger winners to create a little bit of cushion for yourself, I think is a big deal. So my advice to you would be trade pretty much almost as small as you could, which would be 0.02 lots. When you hit like a 2-to-1, a 2-to-1 risk to reward, you sell one of those lots and you move your stop to break even and see if you can catch a runner for a bigger profit. That would be my advice on 0.02 only. Obviously, you don't have to do that. To me, that's kind of keeping it conservative. It depends how wide of stops you trade with. If you're trading with a really one candle stop loss, you might be able to do a little bit more than that. But I think let me look up that account real quick.
Yeah, and I personally, I just use that risk feature. Like, if you don't know what lot size that you should get on, you should know at least how much money you want to risk on the trade. So as long as you have that risk feature on the trade locker, let's say you got the 5K account, so that's like roughly like what, $50 is 1%, if I'm not mistaken.
Yeah, so the dollar amount for your total drawdown on the $5,000 account is going to be $350. So just for an example, right? So if you see my screen right here, right? So my max loss on a 5K account would be $350. If I'm like, okay, I want to take a trade here with a stop loss under these lows. Right now, my lot size is set on 0.02 lots. So if I click this stop loss button and I drag my stop loss to these lows, I would be risking $105 on that trade with only 0.02 lots. So to that point, if you do this with this, similar size stop loss, similar position size, if you lose 4 trades, you've blown the account, right? So this is why I'm suggesting such a small lot size, because you want to give yourself the opportunity to take, 50, 100 trades. You don't want to take 4 trades and you lose the account, right? Because a losing streak of 4 trades can 100% happen.
Yeah, and I would say, because it, like you said, it heavily depends on what time frame you're trading on and how big your stop loss is. Because if you're trading on, and how I always think, people a lot of times get caught up on the lot sizes. I want to have this amount of lot, but realistically, your lot size is just very based on how much risk you're taking. And I don't mean risk in how much you want to put up on the markets, but risk in terms of how big your stop loss is, so a 0.2 lot would be good on, let's say, a 10 pip drawdown, 10 pip stop loss, but it would be for a 20 pip stop loss, you would need a 0.01, half of that to have that same. Then that's kind of why I use that risk tool where you just put the dollar amount so that you know exactly how much to the dot, how much you're risking. If you only said, hey, look, I got $25 for this trade, then you can put specifically $25, and then wherever you drag your stop loss to, it'll maintain that $25. So
yeah. So I'll show that as an example here real quick, Kyron. So here's the risk button right here, right? So I click risk. It then brings up this right here. And the reason it automatically assumed my risk as $103.96 is because that's if it goes the smallest lot size possible with the stop loss where it currently is put, that would be $103 worth of risk. So if I change this to $50, so, right, it's going to tell me I can't do that, right? Because even with 0.01 lots with my stop loss here, it's too big a risk. But if I would drag my stop loss closer, it now would let me take that trade because I'm only risking $30 on that trade. Or I would be, so let's see. Would it automatically move? Let's see.
So if you move your stop, it maintains that 100 wherever you drag that.
Okay. With the lot size.
Yeah. So it'll change your lot size based on wherever
so
you're entering your stop loss.
Okay, I see.
But it'll keep the same amount of like let's say you said $100. If you drag it all the way to the bottom, it would still only be $100. It would just change the lot size.
So so $100 there, and so so $100 with a stop loss where I'm showing it is a lot size of 0.03 lots. It says it down here, real small in the blue. I don't know if you guys can see it, but then if I would drag it down here, that changes it 0.02 lots.
Yeah. Okay. Yeah.
If I drag it down, now it's 0.01 lots. Yeah. So it is changing the lot size there.
So it's definitely relative to whatever your stop loss is. So I would just recommend using that risk tool. Tyler's, let's see, which accounts is best for beginners, fast track, swing, or regular? So it depends on, for me personally, I don't think the fast track is the best option for a beginner, only because you have a smaller amount of drawdown that you can withhold. And so either whether the swing account or the regular account, it kind of depends on your trading style. I think if you're more of a scalper, you're fine with the regular account. If you trade more of the larger time frame, 1 hour, 4 hour, you want to hold your trades through news, then the swing account, it would be the account that you would go for. So it comes down to really how you plan on capitalizing. If you don't plan on being in for any news events, or you're a scalper and you're taking 5, 10, 15, 20-minute positions, then the regular account would be fine. The difference between the regular account and the swing account is the leverage on the account. So I think it's like 1-30 on the swing account, if I'm not mistaken.
1-30, yeah.
On the fast track account, it's 1-50, and on the regular, it's 1-100. So it just varies on what,
I agree.
What time frame and how you're executing on it.
But yeah, I agree. The swing and the regular, like Kyron said, give you the bigger drawdown. So I would suggest that for a beginner. Also, I may even lean more towards suggesting the swing, no matter how you're trading, just because as a beginner, lower leverage is probably better. And also, if you're unaware of the news because you are a beginner and maybe you're not as active with checking when is restricted news, that kind of thing, it just gives you a protection against that as a beginner. Yeah. So, but yeah, I think that's well said by Kyron. Scrooge, how do you guys get on FunderProTv? Yeah, I would imagine. So we currently do trader interviews, and I just saw I'm sorry, I'm so bad on the pronunciations, but Manaja Sarka here. I'm pretty sure Manoj. Yeah, I'm pretty. Oh, wrong one. I should put Scrooge up there. I'm pretty sure Manoj. I think you're the one. Maybe I've been emailing with that I'm supposed to have an interview with. We've been playing email tag here. So, but traders who get funded and get a payout with us get an opportunity to do a trader interview where we sit down and just talk to them about their trading, that sort of thing. And I could see that that could also be something that we do, that any trader who gets funded and gets a payout, gets an opportunity to be a guest on this stream, where we bring them on and kind of just have a conversation, whether they're on for the whole time or just part of it. I don't know, but I'm sure that's something we will start incorporating at some point. I'm not 100% sure what the Black Friday offer is. To be honest with you, I don't know if I've ever seen FunderPro do bigger than 20%. They definitely don't. They definitely don't throw around the discount codes like some of the other firms that are out there, based off of their booking model, and kind of the reliability behind those payouts and stuff like that. So my guess would be 20 to 25%. But I don't know for sure on the Black Friday set.
Yeah, that sounds good.
Well, nice little pop on the NAS position I'm in, kind of battling this overnight opening print, which, if you can see, this is where we gap to an open. That's where this yellow line comes from, is this gap opening print. So I'm gonna keep holding this one. I would, if we get like a pop up above this, I've now taken 3 different entries on this. I'm in this with 0.06 lots total. If we kind of get a pop up above these highs, I'll probably take one of these entries off and start to lock a little bit of profit. But I'm just going to be managing this one for the rest of the day. This will be my last trade of the day. And I think we will be back on Wednesday. I think everything's staying the same with our schedule, even with the holiday. The market's open on Friday. My guess is it's a lower volume trading day on Friday. I still think we'll be on the stream. So if you guys are around on Friday, we'll be back. We'll definitely be on Wednesday. And thanks for tuning in, guys. Thanks for hanging out.
Appreciate
it. The rest of the day. And we'll see you guys on the next one.
All right.
All right, Brian. All right. See you, boys.
See ya.
Good twerking at the end of this one.